Today I will be sharing with you a candlestick formation that you have never heard about. It's a kind of secret candlestick formation because nobody really knows about it, but it's very powerful because it has a very high completion rate and you can use it both for entry and for direction. Why? Because you will see it on all time frames and it does complete on all time frames. If you're new to the channel, I'm a top author on the TradingView platform as well as running an educational program and swing trading full-time with my students. The video will be very valuable and I will invite you to check it out until the end. Okay, so the candlestick formation pattern that we will be speaking about today is probably something that you haven't seen before. Okay, it's something new that you probably haven't seen before, or better said, you have been seeing it from a different perspective. Because many people, when they see a candle like this, okay, with a long rejection wick, what do they think? They think that this is basically a bearish pattern in this case, or a bullish pattern in this case, meaning that basically the market rejected these prices. Now, there's one very important thing that you have to understand of this pattern. Many people think that the next candle in this case will continue to the downside, and in this case it will continue to the upside. Now why? Because basically the market is rejecting these prices. However, what actually will happen most of the times, like 90% of the times, is actually the next candle in this case, it will fill in the wick, and in this case it will fill in the wick to the downside. So every time that you see a candle, okay, that is green and has a wick that is the same size basically of the body, the next candle will fill in the wick. And the same thing for a bearish candle. If you have a red candle in which the body has more or less the same shape and it's long the same as the wick, then the next candle will fill in the wick. So the visual representation here that I gave you is basically exactly more or less how these candles actually look like. Okay, a small wick to one side and a long wick on the other side that is more or less the same shape and size of the body. And same thing for a bearish candle, and the next one is going to fill in the wick. Now let's try to understand why the next one will fill in the wick. Just a quick reminder, make sure you comment below and you let me know which topics you would like me to cover in the next video. Because, okay, if you have a candle that has this shape, what can create a candle like this? Now imagine that you have this candle on the monthly time frame. Well, now I will also show you a live market situation obviously of this candle, but just to make you understand the concept. If you have a candle like this, okay, a red candle like this, what actually happened? What happened is that this wick is nothing less than a retracement on lower time frames. What does it mean? It means that if you see a candle like this on the monthly time frame, what will have happened on the weekly? On the weekly, you will have an impulse all the way down to this low, and then the market made a retracement and the market then closed from a monthly perspective here. Now, why do you expect the next candle to fill in the wick? Because that is the impulse correction and impulse pattern in the market, is how the market actually moves. So you expect the next candle to do what? The next candle to fill in the wick and create the new impulse to the downside from a lower time frame perspective. So if this is a monthly candle, then on the weekly time frame you expect the impulse, the correction that creates the wick, and then the next impulse to the downside. So this is basically how this pattern works. Okay, so it's very simple and it's exact same situation from a basically bullish perspective. So if this is a monthly bullish candle on lower time frame, so for example in the weekly, what you will have an impulse, then you will have a correction, and then the monthly candle closes. And what do you expect from the next candle? You expect the next monthly candle to fill in the wick, meaning that on the weekly time frame you will have the impulse. You already have the impulse, the correction, and you expect the next impulse to the upside, which will create on the monthly time frame the candle that fills in the wick. So it's a very simple concept. I hope I explained myself properly. Now let's go and see a live situation, okay, of this candlestick formation. Now here on this chart, okay, this is AUD CAD monthly chart. I'm taking this chart because I remember that here from a monthly perspective we had exactly this candle, and we actually capitalized on the move to the downside exactly as I will now show you. So here is actually even a better example because we have two cases of this candle. One is here. Look, this is exactly the bearish candle that we expected here, that we have basically studied here, right? It's exactly the same. And what happened with the next candle? Many people probably expected the next candle to make a push to the upside because they said, hey, the market actually here rejected all these prices, right? Created this rejection wick. However, as we have just seen, actually what you expect is for the next candle to fill in the wick. And that is exactly what the next candle did. And here you have another example of one of those bearish situations in which you have a candle like this. So with a wick that is more or less the same size as the body. Actually, in this case, it's longer than the body. And what do you expect from the next candle? You expect the next candle to make a push to the downside. Why? Because on lower time frames, so basically on the weekly time frame in this case, since we are on the monthly time frame, what you will have an impulse, a correction, and you expect the next impulse to the downside. Now, if we go and see what is the situation from a weekly perspective, in fact, what you can see, as we can see, we have exactly what we expected. So an impulse and a correction, and you expect the next impulse to the downside. And if the next impulse to the downside will come, it will fill in the wick that we have from a monthly perspective. So doing exactly what we need from the market basically to do. Now, obviously, if you want information on this retracement, okay, what do you have to do? You have to take your Fibonacci from the high to the low. And in fact, what you can see, the market is in between the 0.382 and 50% Fibonacci retracements levels. So definitely from here, you expect the next impulse to the downside to start. Now, how did we actually capitalize on this move? Now, from a daily perspective, the market was also retesting previous support, now to resistance. So clearly we had even more confluence for the push to the downside. And if we take our daily Fibonacci from the high to the low, we clearly have a market that is in between 0.618 and 0.786 Fibonacci retracement levels that are lining up, as we have already seen, with the structure. So this is just to give you a quick overview of what we had from a technical perspective, and obviously also from a COT perspective. If you don't know what COT is, it's basically the positioning of hedge funds in the market. We obviously very often check those order flow tables if you have seen some of my past videos. But anyway, also there we could see that banks were selling AUD and buying CAD. So definitely we expected a push to the downside. We had the monthly candle that we have just seen. From a weekly perspective, we have the impulse and correction exactly as we expected. Now from a 4-hour perspective, obviously I can't share my rules for entry, but it was a very nice and solid trade to the downside. It was a very nice 1 to 6 risk to reward to the downside. Now, if you're asking yourself why our take profit was exactly here, okay, if you're asking yourself why our take profit was exactly here, that I can tell you. Simply, if you want information on the next move to the downside, what are you supposed to be doing? Because in the same way, okay, before, from a daily perspective, how did we take our Fibonacci? We wanted information on this retracement, so we took a Fibonacci on the impulse. Now, if we want information on the next impulse, we have to take our Fibonacci on the retracement. And taking our Fibonacci from the high to the low of the retracement, we have a -27 as our downside target. And that is exactly why our target was at the -27. Now, regarding the entry, obviously there are many rules that I can't speak about. This was one of our ICI, is called ICI strategy, a strategy that we trade with students, but obviously I can't share with you the rules for entry. I can't even share with you the rules for direction. This was just an example to show you basically that that candle will create an impulse correction and impulse pattern on lower time frames. Now I can't share with you the rules for entry here. I can only tell you that simply this was clearly previous support here, now to resistance, but that is only one of the conditions basically for entry. So obviously I can't speak about the other ones, but clearly previous support to resistance, we already knew that the market wanted to make the push to the downside. So this was a very nice 1 to 6.3 risk reward to the downside. So massive risk to reward to the downside, and it would have not been possible without knowing from higher time frames that the market was actually supposed to be making this push to the downside. If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more free education and analysis for all of you, as well as going and checking out the mentorship program. You'll find the link in the description. It's a very complete program. You first get all the rules of my strategies and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you how to actually apply the strategies with entry, stops, and take profits. So it's a very complete program. I also answer every question that you have each and every day. So I will invite you to go and check it out. The link is in the description, or go and check out the next video.